Hi there, you're watching Chartbusters. I'm Mangla Malu. With me is Nigel D'Souza. This is a show where we tell you about all the buzzing stocks of the day. For the markets, though, a wee bit of profit taking if you must. 100 points shaved off the Sensex, 45 points of the Nifty. The Nifty Bank also at the low point of the day. That's primarily on account of some profit taking. Remember, we saw a big rally in yesterday's trading session. What's heartening though today is that the mid-cap index is higher by about 0.5%, outperforming the frontline indices by 1%. Hi, Nigel.
Well, Manglam, things are likely to get very volatile in the second half of trade, I'm guessing, because tomorrow is the holiday, and then we're getting into that crucial RBI policy meet as well. But the markets had a good run yesterday. The FI data, as we've been talking about since morning itself, very bullish. Let's see at some point of time whether or not this dip gets bought into. For the time being, we're down 45-50 points odd, but the Asian markets on the whole have been under pressure, and in fact today as well is no different as well.
All right, so let's get cracking on all the individual stories that we're tracking this morning. Okay, there you have the Asian markets, like you said, at the low point. And then we have some sources saying that cement prices were cut by 20 to 25 rupees per bag this week in Andhra and Telangana region. Nigel, not too good?
You know, there's source-based information that's coming in there. I've spoken to a few dealers as well, and they have indicated that prices have finally budged. Remember, in South India, we saw prices go through the roof, you know, and then in the last few days, we've been hearing about demand not really picking up. So this is not good news. Remember, this is restricted to Andhra Pradesh as well as Telangana as of now. We're waiting to see whether the rest of South India does follow suit as well. But after seeing prices go up by 60-65 rupees per bag, now there is a bit of a pullback. The key reason I understand is because, in fact, demand is rather weak out there. So on the back of weak demand, some of those regional producers, remember Andhra and Telangana, it's more about the regional players. So you have NCL Industries, Sagar Cement, KCP, they're primarily regional players. And besides that, obviously the India Cements and Ramco Cements, they'll be selling as well some part of their cement in this region. So 20-25 rupees is what they've cut. In fact, I spoke to a couple of dealers out there and a couple of cement producers as well. They were saying they were wondering whether or not to go ahead and follow suit with this sort of a price cut, because some of them believe that the problem is not cutting prices to push demand. They're saying demand is weak on the whole out there. So first signs coming in there, cement prices under pressure. Remember, we're getting into a monsoon as well, coupled with the fact that demand is not good. So that's why, in fact, the first signs of a price cut after a few months.
All right, important. And the first signs of the price cut are also taking their toll on the stock prices. There you have Ramco Cements lower by about 2.5%. We have India Cements. That should also come up for you. Remember, these stocks will see a bigger action given the fact that they are in the F&O space. We're seeing the others as well, the likes of KCP as well as Sagar Cements.
The regional players.
At the low point of the day, they are regional players. So we'll keep an eye out on this space. Remember, over the last couple of months, we have seen a big rally in the cement stocks. So now that the fact that there is been a bit of a pullback, whether that affects those stock prices or not in the longer term, it is monsoon time, and this is the first sign of a price cut on account of lower demand. Okay, we now go back to all the top stories that we're tracking and then get cracking on the individual things that we're going to put out on this show. Rupee strengthens to trade near $69. 69 rupees per dollar level. IT stocks, they are the ones who underperform, as TCS also trades ex-dividend today.
And Swaraj Engine gains close to 3% after Mahindra & Mahindra bought a 1.5% stake in the company yesterday. Remember, Swaraj Engines is a subsidiary of Mahindra & Mahindra.
GE Power, too, among the gaining stocks after it gets a contract worth nearly 738 crores.
Well, how do you trade the Nifty from here? Should we be looking to buy that dip of around 45-50 points that we're getting? Ashwini Gujral joins in to run us through how do you trade the Nifty. And Ashwini, yesterday on this show itself, you were talking about buying the Nifty Bank, and that trade worked out. So what's the strategy both on the Nifty as well as the Nifty Bank?
See, my sense is that is likely to work even today because the mid-cap and PSU banks are doing extremely well. So my sense is this correction will get gobbled up as we go into the close, given that we are moving into a policy. And similarly, you know, on the Nifty, 12,050 thereabouts is a nice zone where the Nifty would have its natural correction. So this is a time to get long on you know, Bank Nifty and Nifty. Also, you know, mid-cap PSU banks like Canara Bank, BOI, etc. So that way, you know, right now is a good time to buy into the correction of yesterday's rally. So OBC is a buy with a stop of 99, target of 110. Union Bank is a buy with a stop of 76, target of 84. And Larsen is a buy with a stop of 1560, target of 1620.
Right, Ashwini, I'm not sure whether you were tuned into the chat that Nigel and I were having about cement prices, but that seems to have had a bearing on India Cements and Ramco Cements from the F&O space. Currently, they're extending their cuts. In fact, India Cement is lower by about 2.5%. We have Ramco also lower by about 2.5%. After the rally that the cement stocks have seen, what does this bit of a downtick in terms of price suggest chartically? Is there way more on the downside, or maybe this is a dip?
See, historically, this period has been soft for cement prices, given that ACC etc. all are sitting on fairly decent moves, 25-30%. I think this could lead to some amount of correction. So cement is a place that you tend to avoid right now in these monsoon months.
Okay, all right. Thanks so much for that, Ashwini. Well, in terms of the cement, we're getting into monsoons, as we were saying, Mangalam. The problem is demand. Dispatches were not taking place in the last couple of months, though prices remained higher. So this is definitely not good news. But now we'll have to see whether or not, what happens is with regard to the South and the West, whenever there's a bit of a trade-off out there, because South, the manufacturers, they send some of their stuff to the West as well. So we'll have to see whether or not this percolates to other part of South India first, and then whether or not it goes to the West region of the country as well. Other companies that have South exposure are ACC and Ultratech Cement, though not specifically to Andhra or Telangana. They have South exposure. We don't know the breakup out there. Someone who doesn't have exposure to South India is Ambuja Cement. So just a few details to help our viewers.
All right, so we'll keep an eye out on how that pans out. But meanwhile, we had our colleague Lata Venkatesh, who caught up with Pankaj Vesh of Citi, began by asking him how he's assessing the global economy and how serious does he think is the global growth scare.
The yield curve in US has a very good track record. It's better than even the Federal Reserve's track record in terms of calling recessions or calling the extent of growth, and certainly better than most economists out there. So I take it very, very seriously. There are people who've explained it away, including in the Fed, saying it's just a factor resulting from the fact that we've been tightening and that we were doing QE on the long end. But I think that's just a truism. I mean, the reality is that yield curve came very close to zero. And in December, Chairman Powell had made relatively tough comments, which got the market scared, which then he completely reversed in January. So I think we saved it so far. It's not touched zero yet. 2 at least haven't. But to me, it is very significant. I use that as my premier benchmark in terms of probability of recession. And then, as you rightly mentioned, with bonds getting down to minus 20, 22 basis points, a new low. And US 10 years,
1988, I believe.
That's right. And US 10 years coming off more than 100 basis points from where we were a year ago. At this phase of when Fed has been hiking rates and the economy is not yet teetering, I mean, I think there's still reasonable data. That is very significant for US 10 years to back off so much. Now, the Fed funds futures are talking about a complete 2 basis points cut this year and then another 2 next year. So there's something meaningful going on. And in fact, if you would like, I could bore you with a couple more important emerging markets. Brazil is making a brand new low. Real yields there never used to be below 400, 500 basis points. Now they're like in the 200 handles. You have Korea, China, even Poland, where inflation is picking up dramatically. All these markets are coming in and making new lows in yield. So there is something bigger going on. The hunger for yield is no longer just in the core developed markets, but in a lot of emerging markets where in the past we used to think of a risk-off environment. As yields will go higher, actually yields are going lower. So there is something quite significant. While this can all yet be wrong, and President Trump could decide tomorrow morning to be friendly with China and strike a deal, and so all of this will reverse. But at least right now, all these markets synchronously are telling us, as well as commodity markets, are telling us that there is a problem. And so we have to take it very, very seriously. These are deep